All right, welcome to Talkin' Investing. I'm Tom, and as always, this is not financial advice. Today, I want to do a video on the overall U.S. market. So I'm going to go through all the indexes and see how they're doing year to date. We're almost done with the first quarter of the year. I want to see how the markets are doing. This is kind of a check-in update video. Also, I want to talk about, have we hit a bottom and are we in recovery mode? So I'm going to take a look at the charts and go through that as well. If you're new to the channel, please subscribe and hit the notification bell. Also, please smash the like button and feel free to drop a comment below. You will also see in the pinned comment we have a link to our free Discord, so we'd love to have you over there as well. All right, let's take a look at how the market has done this year. Let's start by looking at today. So today is Tuesday, March 22nd. So we're almost done with the first quarter. Next week will be the end of the first quarter. Right now, the S&P is up 1% on the day today. The Dow is up 0.81%. The NASDAQ is up 1.64%. And the Russell is up 1.33%. So it is a green day today. Yesterday was a bit of a red day. Put the two together and we're up for the week. So having said that, I want to put that in perspective as to where we were at the beginning of the year and where we are now and what direction we are trending in. So I'm going to go to a quick spreadsheet that I made myself, and then I want to go look at some charts and see what's going on. Okay, this is a simple chart. In this column, you'll see January 1st, 2022. This is where each index was on the very first day of the year. So the first trading day of the year was actually January 3rd. So this is where they were at basically December 31st coming into this year, and I've put where they were. This is as of Friday. So we just took a look at Tuesday, and as of today, Tuesday, everything's a little bit higher than it was as of the close on this past Friday, March 18th. So I'm going to use these numbers and understand we've actually gotten a little bit better. So I'm going to start from the bottom, and these are kind of ranked in order. All the indexes are down on the year. The NASDAQ right now is lagging behind. So it's still down 11%. The NASDAQ at its low about a week ago was in a bear market, meaning it was down more than 20% off of its highs in November. So even though it was down 11.19%, if you look at the week last week, the NASDAQ had a massive week. It was up over 8% on the week last week. That still left it down 11% for the year. But as I said, this was in bear market territory. So this was a massive reversal. And you're going to see everything last week had a massive reversal. And that's why I want to talk about whether or not we've reached a bottom and are we recovering? Is this a fake out? So we'll look at the charts after and take a look at that. But you can see last week was a massive reversal in the market. And a little bit it came out of nowhere. I'm not sure anybody was expecting that at all. The Russell year to date was down 7%, and last week it was up 5%. The Russell also reached bear market territory off of its November highs. And again, this is measuring not from the November highs, this is measuring from January 1st. So this is showing the progress of the index this year in the year 2022 so far year to date. The S&P 500 is almost in the same spot. It's down 6.36% year to date, and last week it was up 6%. So that is a fantastic week for an index. It's the best week we've had, I think, in over a year. So finally, the Dow is down 4.36% year to date, and it was up 5.5% last week. So that's a big move for the Dow. The Dow is much less volatile than all these other indexes. The Dow and the S&P reached correction territory, meaning they were over a 10% down off of their highs. And I believe their highs were in January. But you can see now they're recovering from that, and they're out of correction territory, still down on the year. So the indexes are all still down on the year, but last week was a massive up week. I just want to take a quick peek at the Friday that preceded this. Okay, so this was the week ended Friday, March 11th. In my opinion, this week was the bottom. And this was the week ended March 11th, 2022. That does not mean that I think we're going up in a straight line from here and everything is sunshine. I do think this was the bottom though, and it's going to be a tough year in my opinion. And so far, for sure, these were the lows on the year. So that previous week, you can see all the indexes were down. 2%, 2.88, 1%, 3.53% on the NASDAQ. So you can see the NASDAQ tends to have more dramatic numbers. But this was a very down week. It was the lowest week of the year. These were all the lowest week ending numbers of the year for all 4 of the indexes. So we seem to be trending in the right direction. There's an awful lot in the world going on, so I'm just going to mention a few things. And one of the reasons why I think we may have hit a bottom, we did have a lot of things come at us at once, the market. We had geopolitical stuff go on. We have supply chain stuff that continues to plague the market. We've got inflation numbers. The CPI numbers were the worst they've been in 40 years. We've got the Fed coming out talking about raising interest rates, and they did do their first interest rate hike in years. So actually, I think that Fed hike of a 1/4 point marked the bottom for the markets. I think that was pretty much built in. That's what everybody was expecting, and their forward guidance was just about what everybody was expecting, and that tended to signal, I think, the low. Now, geopolitical circumstances could change, right? There's the situation in the Ukraine is extremely volatile, and it is by no means resolved. So that obviously, in addition to being a serious situation, that obviously could have a potential impact on the market, depending on how that goes. But it seems like that has been built into the market. I hate to even talk about that in relationship to the market, but unfortunately, it does affect how the market moves. So it is one of the factors. The other thing is oil. Oil seemed to spike about a week and a half ago up to $130. It's pulled back. It's still very high. So I would say oil is one of the big risks to the market this year. We're at about $112 a barrel today. That's very high. It's almost double where we were a year ago. So that is something to keep our eye on going forward. These are a few of the things that could derail this bottom that I think we've put in. Let's take a look at the charts. All right, I'm going to start on the NASDAQ. This is the NASDAQ on the 1-day time frame, so each one of these candles represents 1 day. The NASDAQ dipped down on February 24th to a low on the year. And then again, on March 14th, it went a little bit lower than that. So this was the low of the year. And you can see since then, it has been very green. So this is 1, 2, 3, 4 very big green days in a row. Technically, this day was red, although it was basically a break even. And now today is a nice green day. From last Monday until this Tuesday, the NASDAQ is up 12%. That is a gigantic move. You can see this was kind of a double bottom here. We formed a W, and we're right back to where we were, in the middle of February. So obviously we would want to see a breakout above this level, but I'm going to draw a line in to show you why I think we've already broken out. All right, this blue line starts on January 4th. That was the second trading day of the year, and you can see this is a downward trending line for the entire year so far in 2022. We've tested this line several times and failed. As recently as March 3rd, we were right on the line, but we got rejected and went down heavily from there. This time, however, last week, we did cross over this line and finish 1, 2, 3 daily candles well above that line of resistance. And now today is another candle that so far seems to be going in the right direction. So to me, this is an official breakout. We're 4 days into candles that opened and closed above this line of resistance that has been in effect all year. And it's only 2.5 months, but this was the trend for the year this year. And I think you're going to see all the indexes are in a very similar situation. The NASDAQ is the more volatile, and this is the biggest of all the breakouts. But I'm going to quickly look at the other charts and show you, I think we're in the same place. This is the S&P 500. I'm going to draw a similar line, and you can see a similar thing has happened here. We had a bottom on February 24th, the same day as the NASDAQ did, on March 8th, and then again on March 14th, which was the same day as the NASDAQ, only this time, the S&P didn't get quite as low as it did here. But again, you can kind of see the W pattern and the double bottom on here. And once again, I'm going to draw a trend line. This trend line is for the year of 2022 so far. So we tested it here and again here. We made a run at it here. But you can see last week, once again, we did break out on Thursday. The entire Friday candle started and finished above this line. Monday, the same, and now Tuesday again. So we're several daily candles into a breakout above this line. So these two charts look similar, and all four of them look very similar. I'm going to do one more. I'm going to do the Dow. That is the least volatile of all of them. If we look at the Dow, same exact thing. February 24th, it hit its low. It candle wicked down to its low on the year and closed off of its lows. And then here again on March 8th, we had another low. So the 8th and the 14th were a couple of the low days across the board. But again, this looks like a double bottom. And, you can see the W in here. And I'm going to draw the trend line in again. So on this one, depending where I draw this trend line, and I'm being as conservative as possible, going all the way out here, we still have, this is our second day in a row. Now, the candle on Friday closed above the trend line. Monday and Tuesday are above this trend line. So this is a less definitive breakout, but it seems to be following the same pattern as all the other indexes. And we seem to be in a local upswing. So I'm expecting the market to rally for a little bit. But I want to reiterate a couple of things. Number one, this is not financial advice. I'm looking at these charts and I'm just letting you know what I see and putting some trend lines in that I think are very useful. But as you know, the markets over the last year have been extremely volatile. So even if we have bottomed out, I do expect downward pressure at times. And you don't ever know when that's going to come. So in other words, we have yet to test this line of support and pass. So we need to see that happen. We could push down, test this line of support, bounce off of it. That would really reiterate that we have moved into a better segment of the market. There will be ups and downs. So everybody, please be careful investing. Do your own due diligence. You can see these charts have not been good this year at all, but it does look like we have a very nice, this is the strongest trend we've had in a long while, and we'll see if it can continue. I think it will. So that's my update for the year on the indexes. Thanks so much for watching, and we will see you in the next video.